And just like that, the peace party in the Strait of Hormuz is over. Commodity markets around the globe are reacting already. We're going to focus today on gold. What are the levels? What are the right strategies we should apply now if we want to get involved in gold or the gold miners? And what is the zone that is important if you want to get on the buy side with gold? Because if I'm right, these next weeks, maybe month, will be the last great buying opportunity for gold and the gold miners in quite some time. Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Wilhelmi. Welcome to the channel. If you're new here, hit the subscribe button. And a shout out to all the very kind gentlemen and ladies that came up to me at the Invest convention in Stuttgart, which is the main finance convention in Germany. Great conversations about Australian gold miners and the oil crisis, biotech and AI, gold and gold mining stocks. We talked about Equinox Gold. Anytime you see me at one of these events, please come up and say hello and let's have a chat. Now, let's chat about gold. As you can see, what I've been saying in the past videos about gold has turned out to be accurate as long as we're below the 50-day and really below this zone right here as well. So we don't need to do anything. We can just sit back and have some ice cream. Now, it's not great for gold that it was not able to take the 50-day back. Instead, it doinked off it. And also doinking off this uptrend that has been in place since the fall. So this was the fall-winter rally that has pushed gold up. And as you can see, we broke below it, retested it again. Yes, at a higher level, but clearly there's no strength in gold on the buy side right now. You can see it. And I've pointed this out before. We do not have the strength on the buy side. That will come in once we break this downtrend. And again, I've pointed this out before. If you missed these videos, hit the subscribe button so you don't miss these videos. If we zoom out, we can clearly see that we're running into the more interesting final phase of this ascending triangle formation here. So it's a bullish consolidation. And it also tells us at the very latest, we should get a breakout in the beginning of August. Could actually be right around my birthday. Who knows? We'll see. I personally think we'll break out before that. But if we just follow this formation, we'll doink around within it and then break out at the end, at the latest. And we know once you break out from these type of formations, the moves pretty vicious for sure. So which direction will it be? In my opinion, it will be to the upside. Now, short term, it looks more and more like we're going to see the pullback in gold that I've been talking about if we don't reclaim the 50-day moving average, the purple line, which we have not. Now, not all is lost for the bulls yet, but it's getting a little cloudier every day. So where would we go if we go down? The most important factor here is the 200, this golden line that you see here. I've said in previous videos, it's moving up around about $50 a week. So as you can see, it's already now above the uptrend. And this is the uptrend, the big one, that has been in place since the beginning of 2025. We kissed the 200 here in this sell-off. You remember when the central banks were selling in Russia and Turkey. So I think if we correct, the 200 is the maximum downside that I see. it doesn't really matter because it all comes together in this area right here of 4 different support zones, which is a lot and should definitely give us support unless something crazy happens or a big external factor, like again, a central bank is forced to do some massive selling. That might change things a little bit, but only very, very short term, as we saw here, right? We had this monster sell-off, but then as you saw at that same day, it already got bought back up. So this zone is now the new target zone for a possible pullback in gold. This is my maximum downside. This Fibonacci retracement, this blue support zone, and then the 200. So we're talking somewhere around 4,300 to 4,400. That is what I would define as a new target zone for a correction if you want to get in with the physical metal. And that would also be a higher low within this intermediate consolidation that I called out when gold was hitting 5,600. So that's very positive for us. That's a good sign. Remember, sentiment will be negative when we get there, right? It will be the good old, the gold party is over type of panic. But that is where you want to get in back on the gold market if this is what you want to do. If you want to add to your long positions, or if you don't have any long positions in gold, then that would be a good point to do so. Could we go lower? Of course we could go lower. But if we break the 200 and we break this uptrend and confirm this, then we have big problems in the gold market. And I do not see that happening with the fundamentals that we see developing in the macroeconomic field and the geopolitical field. Iran clearly feels that it has the upper hand in this conflict now. And it's very obvious that Trump is going to have to make some serious concessions if he wants to reopen the Strait of Hormuz. That also means that the Middle East will not go back to a problematic but fairly stable situation that we had, like 2 months ago and before. So the geopolitical risk higher, oil price will be higher as a result of it, inflation will absolutely rise. Remember, we got decent inflation data, but don't forget, any day that the oil price stays higher, inflation will start going up. More and more companies will raise prices. All of a sudden, that summer vacation is going to become a lot more expensive because the airline's going to raise prices. All these things are going to happen. Food prices definitely going to go up. I'm already hearing that they're starting to go up in some areas. So that's happening. That's good for gold. But Trump still will have to cut interest rates because that's the only way how he knows how he can stabilize the market. And Wall Street does not want a bear market with all these big IPOs like SpaceX or OpenAI coming to market. They want to unload these shares to the dumb money in a good market so they can get the best possible price. Which, by the way, you should keep that in mind. That's a warning sign. When they're starting to pump out the IPOs, that's usually when you know you are late cycle, which we are. We are late cycle as far as this cycle is concerned. But that means lower interest rates. That's also good for gold. And that's why I expect gold to break out to the upside, and to break out to the upside earlier than the peak of the triangle formation or flag formation, whatever you want to call it, because the market's going to start anticipating these events coming. So the inflation rise, lowering of interest rates, the midterm elections. So I'm more looking at June, maybe beginning of July for the breakout. That means we have a correction in gold now, and if the overall market has a correction, the gold miners should come down even further. And that then would be a really good buying opportunity for someone that is interested in gold and the gold mining stocks. And again, this is not investment advice. I'm not your financial advisor. I'm too good looking to be your financial advisor. There's that. So I hope you have your watch list ready. I adjusted mine after Zurich, and when the prices come down, that's where we're gonna jump in and buy the mining stocks. Because if I learned anything, yes, it's true, the higher energy prices gonna hit the margins of the gold producers, but not all of the energy costs are created equal. Remember, this is the time where you really need to look into the projects, and this is the inside baseball information for the mining sector that's really important. The biggest problem gonna be with one mine producers that have mines in very remote areas where they need diesel generators to keep the electricity running. They have real issues. If we're talking about the bigger juniors or even the seniors, multiple mines, huge projects, diversified, there'll be hits, but it won't be that bad, especially if the gold price is going up. That's going to offset some of the energy costs. And again, I don't expect the energy costs to go to the moon. They're just going to rise. But then they're going to find the baseline. And then the mining stocks, if the gold price keeps rising or the silver prices keep rising, still going to make a ton of money. To me, the gold and silver producers are still one of the best stocks, along with drone technology, defense industry, military industrial complex, for the coming years. So that's it for today. Once again, shout out to all of you that came up to me in Stuttgart and said hi. It was really nice to have conversations. Super cool to meet you. I really appreciate that you watched the channel. That's it for today. Have a great start to the new week. We'll talk tomorrow. Bye-bye.